Investing Made Simple, a starter portfolio and emotional discipline playbook. Introduction. Over the next 30 days, this playbook helps build a calm investing habit. A simple portfolio, small automated contributions, and 2 rules to stop panic moves. No stock picking, no signals, just a repeatable system. Read one section at a time. Each chapter ends with one action. Write decisions down. Start small. By day 30, the account is open. Auto deposit is live. The allocation is in place, and a one-page checklist sits near the workspace. 1-2. Chapter 1. Mindset rules that prevent panic. Headlines shout. The plan whispers on paper. 2 rules keep beginners on track. Rule 1. The 48-hour rule. When fear or hype hits, wait 48 hours before any trade and complete a one-page checklist. Income, expenses, horizon changed. Allocation outside plus or minus 5% bands. Reacting to news or the written plan. If nothing material changed, do nothing. Rule 2. Automate first. Set a fixed payday contribution. Increase later. 1-2. Action today. Draft a 3-sentence policy. Goal, horizon, default allocation. 1. Print the 48-hour checklist and keep it within reach. 1. Add a Newsday reminder. Do nothing is a decision. 1. Chapter 2. Index funds, diversification, and fees. Plain English index funds hold many companies at once. Diversification means one loser cannot break the plan. Fees compound against returns, so lower is better. 3 truths. Broad markets beat most pickers after fees over long periods. One global or total market fund gives instant diversification. A fee under approximately 0.2% is a good target. Key terms: index fund, market tracker, expense ratio, annual percent fee, tracking error, how tightly a fund follows its benchmark. 1-2. Action today. List 2 broad index funds that fit the region. 1. Set a personal fee line. Prefer expense ratios below X%. 1. Decide between 1 fund simplicity and 3 fund flexibility. 1. Chapter 3. The 1 fund versus 3 fund portfolio. 1 fund, a single global total market index fund. Simple, diversified, few decisions. Less control over home versus international. 3 fund, stocks plus bonds plus cash/short-term bills. Smoother ride, adjustable risk, easy discipline, requires occasional rebalancing. Starter examples, not advice. Conservative 40-50-10, balanced 60-30-10, growth 80-15-5. Pick one, write it down. If unsure, start balanced and only change on scheduled reviews. 1-2. Action today. Choose model and target percentages. 1. Set rebalancing bands plus or minus 5%. 1. Add both to the one-page policy. 1. Chapter 4. Getting started. Brokerage setup and first auto deposit. Pick a reputable low-cost broker with easy funding and auto invest. Turn on 2-factor authentication and add recovery options. Link a bank, set a small payday auto deposit, and schedule recurring buys if available. First purchase, buy to match targets, record date, amount, tickers, ignore daily price moves. The habit matters more than today's price. 1-2. Action today. Open the account and set a small auto deposit. 1. Make the first purchase per the written allocation. 1. Log it, close the app, get on with life. 1. Chapter 5, Emotional Discipline Toolkit. Make do nothing the default. Use a one-page decision checklist. One sentence reason to act. Has income horizon changed? Is allocation outside plus or minus 5%? News or plan? After 48 hours, choose buy, sell, or do nothing. Default. Place the checklist near the workspace. Set a 2-minute timer on big news days, and reread the 3-sentence policy before any trade. 1, 2. Action today. Print and sign the checklist. 1. Add quarterly review reminders. 1. Tell a trusted friend the rules for accountability. 1. Chapter 6. Rebalancing in 10 minutes. Purpose: keep risk near the target when on a fixed quarterly or yearly schedule, or when an asset drifts beyond plus or minus 5%. How: direct new contributions to the underweight asset. Sell overweight only if needed. Mind taxes and fees. Prefer rebalancing with contributions first 1, 2. Action today. Choose a schedule, quarterly or yearly. 1. Add a 10-minute rebalance check to the calendar. 1. Practice with the rebalancing log template. 1. Chapter 7. Common pitfalls and fixes performance chasing. Buying last year's winners hurts discipline. Stick to the plan. Market timing. Headlines feel urgent. Wealth grows by staying invested and adding monthly. Fee traps. High fees rarely beat low-fee index funds after costs. Read the expense ratio. Too many accounts. Fragmentation breeds confusion. Simplify where possible. 1, 2. Action today. Name one personal pitfall and a counter rule. 1. Remove unjustified high-fee funds from the watch list. 1. Chapter 8. Your 30-day action plan. Week 1. Pick portfolio model, draft policy, open account. Week 2. Set auto deposit, make first purchase, print the 48-hour checklist. Week 3. Log contributions, review fees, practice do nothing on news days. Week 4. Dry run rebalancing math, schedule quarterly review, plan the next contribution increase after a raise or bonus. 1, 2. Appendices A. Glossary, index fund, expense ratio, diversification, rebalancing, allocation bands, automation, plain English definitions. B. Printable checklists. 48-hour decision checklist and a 12-month contribution habit tracker. C. Monthly contribution calculator, Sheets, Excel. Inputs monthly C, annual R, months N. Output uses monthly compounding. Note: projections are not guarantees. D. Rebalancing. Log fields, date, asset, target percent, current percent, drift, action, notes. E. One-page investment policy, goal, horizon, default allocation, contribution amount, date, rebalancing schedule, decision rules, fee preference, and do nothing, triggers. 1, 2. Disclaimer: educational only, not financial advice. Investing involves risk. Make decisions based on personal circumstances and local rules on regulation, taxes, and fees.